Well, good day all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for the evening of Tuesday, the 1st of April. Yep, it's April Fool's Day. And tomorrow is Tea Day, April Tea Day, Tariff Day. So we will get at 3 in the afternoon the president's tariff announcement. That'll be Chicago time, 4 o'clock Eastern time is what I understand it to be. We will see. If he does it at the times he stated, the futures markets, not these markets, but the futures will be open because they trade until 5 Eastern time, 4 Central. So you would have the stock indices open to judge, you'd have the energy markets, you'd have the currency markets, interest rates, and the metal markets still up and trading. So that would give you a flavor of what's going to be. And then, of course, you go to the evening trade after 5 p.m. Central Time in all the futures markets. They start rotating and opening. How will they react? Nobody knows. I don't think anyone has an idea what the president's going to do, let alone the president. I really believe what I'm saying with that. I think he's still tossing and turning, making decisions. Probably 80% are made, and now he's probably figuring out the last ones that he has to do. It's a pretty setting. Have you ever been to the White House? I, very fortunate, have been. I have a family member that worked at the White House, and now he's actually working for Vance. And he's not political. It has nothing to do. He was in the Army, and he was there, and now he learned a lot, got out of the Army, and now he just got hired by Vance to do some work for him. Again, not political, technical work. All right, so pretty interesting if you've ever been there, and because I had a family member, I had this fabulous tour. I've got all the pictures, and it's pretty exciting when all that happens. I even got a call from Air Force One. I'll never forget it. And the operator, this is the White House. We have a call for you. And it wasn't the president. It was my family member. It was very fascinating. I was impressed. That was 5 years ago. Maybe I should go back because I can get in now. You laugh at those. I laugh at it. All right. So what do you do with all this? All right. The smartest thing you can do, and I heard it today on CNBC, and they were right. Analysts there, some on Bloomberg. And they said, hey, if you have a shopping basket and there's companies you wanted to own and you feel you got to own them, you just got them on sale. So if you're a tech guy and you want to buy them, okay, this is your opportunity. And you don't just plunge in. Maybe you buy some here, you buy some there. I can't argue with that. The companies haven't changed. The economies have changed. What I can argue with is I don't know what kind of economy we're going to have after tomorrow. How severe are these tariffs? Or how mild are these tariffs? How is if you will, the reaction to them from other countries that we're tariffing going to be on us? So if you know all that, fine. So that's where I differed with every one of the people there. I agree with the concept that you get your shopping list ready, but I think you want to see the reaction to the tariff. You're allowed to say, I knew I should have bought it and the market got away. Does it really matter if you got the last 1% or whatever? What if it drops 10%? Then you're going to be saying, boy, am I a smart guy. Yeah, this is where I'm going to be. Here's my list, and I'm going to go. There is no right way for me to tell you this. All right. So as we look, you can see Microsoft got a nice bid today. STNG holding the lower Bollinger Band. Automakers, well, you're getting a bid over here, so I was impressed with that. I was really happy to see Uber up. This is one of the companies that I told my clients off weekly charts just this weekend where I wanted them to pick it up, and we got fortunate, all right? But I also said, you got to risk 15% on the trade. It's a big amount of risk. BND, I get the bid, but will it be there tomorrow? All right, I don't know the reaction. I'm impressed that Amazon can hold the 190 level, but this is a company that could be in real big trouble depending on how many of these stores that make up Amazon get tariffed and what happens with all that. Imagine BETZ, Temu, Alibaba, where's this all going? What is the president going to do with small packages from China? Will they suddenly have a tariff on them? I don't know. There's just so much I don't know. I'm better off saying I don't know. And that's the hardest thing. You've got a mixed picture all through here. And Tesla stood up today, as did NVIDIA. Okay, now let's see what we've got. Maybe before we do this, we take a look at the normal information we're going to get tomorrow. Let me come there for you first. And here it is. You're going to get the mortgage bankers' weekly numbers. Now, this is weekly, so it's not 1 month together. What did interest rates do? We know that they've recently, over the past 3-4 days, suddenly the rush is into them in a big way. But they were creeping up about a week ago, so don't know which way that'll come in. Private sectors, my brain, which maybe it's missing something there. I keep reading what the different Fed regional bank presidents and governors that are traveling around are hearing. And to a person, they're saying companies are concerned. They're having trouble passing on higher prices. They feel that they can't make a business decision because they don't know where we are right now. Well, is that good for jobs? I wouldn't think so, but we'll find out. Factory order data. I would think that companies that have wanted to front load are doing so, and that's February data. So I would think it's good. Why? If you want to beat the tariffs, you want to get that stuff on your premise before the price increases come from the guy you're buying it from, all right? Or the raw material. So I'm giving you guesses that wouldn't surprise me. The announcement comes out, sit in your seat. Remember, what time is it in Asia? They're asleep. In Europe, it's going to be, if it came out right at that hour, it's somewhere between 9 o'clock and 10 o'clock, depending where in good parts of Europe you're at. It's going to be an interesting one. That's all that you could say. All righty, let's go now back to what I was talking about and get to the charts. Here we go. Okay. McDonald's. Well, McDonald's filled this miniature gap that it had here, came back up today. To me, the trend is still up. Higher lows, higher highs. The market held and is holding so far the 18-day average. And the reason I brought it up, regardless of the tariffs, we're going to eat. And we may not go out and eat something really big after tomorrow. I'm talking big in the way of expensive food. But you're going to eat. You might feel, I'm going to be broke, and you're going to McDonald's. That's the reason I brought it up. I don't know. But I do tell you, if you get under here, then you've got a problem. So the market, in my opinion, should not take out 304.44 if it's going to hold on. And possibly it makes a run to the 320 level up there. That's how I'm reading the chart at this point. Momentum-wise, you're getting overbought. So I'm not saying, oh, McDonald's is going to 340 right now. It's not what I'm saying at all. But I thought into this whole zone with that Bollinger Band is a possibility. That's all. I'm still not liking what I'm seeing in Dutch Brothers. I think they got so rich that it needs to consolidate more. Now, the good news is coffee prices as a whole seems to have stopped that rapid ascent to the upside. It's not descending very much. It is stable. Okay, well, the market's also stable against the 100-day average of closes, and that is the battleground. Once it cleared it back here, it just kept going, so we'll see what happens. In CrowdStrike, like all of the tech companies, tech got hit. Simple correction, big time hit. Nothing wrong with the companies, very much wrong with the mental attitude that's going on and the fears for the economy. Also, nature took its course. PEs got out of whack. They're coming back in the whack. It's called a correction. It happens regularly. We're spoiled because we've had so much of a bull market for years. Sting went down to the lower band, got a bounce, but there's nothing friendly here other than you're in oversold territory. That's about it. Alibaba, okay, which way did they go? Now, there's word that China is stopping, as I told you, all of NVIDIA chips. So if that is the case, These companies don't do well with that. Where are they going to get it? They can write all the DeepSeeks they want and everything else to make the software work better, but you need the computing power. And China, you ain't got it. Yes, you can develop smaller chips for phones and do all this. NVIDIA stands out by itself. In Robinhood, well, I'm of the belief that we're about to turn on the big spigot of volatility. Generally, brokerage firms do well in that. We'll see. ExxonMobil, a winner. So McDonald's has been a winner of XOM for sure. Look at that. I mean, it could break now. It doesn't matter. It's had a heck of a neat run since the beginning of the month. In the financial services, I don't know. And the market doesn't know. You've stepped out of your uptrend. You have a higher high, lower low. You're currently caught, that's the best word I can give you, between the 100-day average in green and the 18-day average. You were overbought and you're correcting, present tense, an overbought condition. Neither number is now over 70. When we go to the industrial sector, you've gone from literally the upper band to the lower, back to the 18-day average in the 200, and the market is pretty neutral here, sitting going, tell me how this is going to work. And that's basically what the chart is saying. In the energy sector, just like we were looking, still okay. You've got support at the a big combination here of the 200-day average in gray, the green, the 100, and the 18. But to get there, you have to step out of the uptrend. The interesting thing in the market, similar to what gold did, this market got down, lost its embedded reading. When you get a reading under 79, the only time you can get it back is the very next day. It got it back. Gold didn't. But when you get it back, what you've done is you've sprung a bear trap. Bear because traders in momentum thought the market was going down and the market instead moved up on them. Now, if it loses it again, that's often a sign that, it just couldn't spring enough of a trap. But until that low's taken out, you're still hoping for the upper Bollinger Band. In GLD, unlike the futures, this stayed embedded. The futures didn't. And this market keeps hitting that upper band, and each time it does, it, within days, backs off under it. Now, is this set of tariffs going to be super inflationary? If it is, how much more does gold have to go? That's what you got to ask yourself. If it's super inflationary, do traders move into bonds and notes, figuring they got to look for the Fed to come rescue the day? That's another possibility that'll be there. So many things we have to look at. Silver is not gold. So traders that are buying silver with these option strategies and so on, thinking it's going to go, they could be right. I mean, at any point in time, even a broken clock is right twice a day. But this is not gold, and this is very much still an industrial metal. It's still a $30 item. It, under the Hunt brothers, was $50. It's $30 still. How many decades ago was that? Versus when gold was $100. 200, the old gold silver ratio. I remember them 10 to 1, 20 to 1. Now it's 90 to 1. In the copper market, do we get tariffs or not on copper? The head of Freeport-McMoRan was on today on CNBC. She didn't know. And she was very good. She said, all this talk, well, we'll make more copper at home. She said, yeah, when? Because it takes years, not a year or 2 years or 3 years, years to develop new copper mines. They have the resources, they have the copper fields, that they're comfortable with that, but you've got to develop it. So where do you get the copper you need right now? So if we tariff it, what does that mean? Copper's fallen, not because of that. It did, and she mentioned it. She said the spread was so big between COMEX and the London Metal Exchange that the traders are moving in, taking advantage, and delivering on it. And this is reflecting that. That's why it came down. I was so happy to hear her say it, because I've been telling you that for a while. BND, you can see the lower low, higher high. Okay, pause. That's what the markets are doing. They're saying, I don't know. I want to be very careful right here. UUP. You don't think that the market's just drifting sideways? When you narrow in Bollinger Bands like that, when does that happen? When volatility comes out of the market. You've lost the volatility. Is this event going to bring it back in? I would think so. So what some traders are probably doing is they're looking at options, buying puts and calls, hoping that the market breaks out of it. Not a strangle where you're looking for it to come in. They're looking for the explosion out one way or the other. That's what I would be thinking. Same thing in the euro. So you put this all together, that's the game plan. We'll be talking about this and strategies in tomorrow's letters. So if you haven't gotten my letter, the letters from Linn, that you can see what our clients get and you get a sample to see it, take a look. Take a look at our price counts. We put those out every day in charts. This is where you want to be looking right now because it gives you an idea what's going on. Go to iraepstein.com, free offers. Sign up for the stuff you want there. I'll catch up with you all first thing in the morning. Have a great evening.